Today, we are talking about Warren Buffett's favorite stock, Coca-Cola. Why? Because last week they just increased their dividend for the 64th annual for their 64th annual raise. That means 64 consecutive years of giving out dividend raises, okay? And if you want to have any idea of how lucrative this company has been for Warren Buffett, just know that in the year 2025, his company, Berkshire Hathaway, stood to make over $800 million just from their dividend returns in Coca-Cola, okay? So if you ever needed any proof as to how lucrative this company can be and how profitable it has been, then look no further than somebody like Warren Buffett, who has been investing in this company for a multitude of years and has made a lot of money from Coca-Cola. All right. And the top reasons why it may be a smart decision or an investment for you or for any investor going forward in 2026 is going to be what we talk about here today. Whether you're new to the stock market or a longtime investor, this is a classic blue chip company that I think everyone is able to recognize when you walk into any store across America, right? They continue to show surprising gains, surprising strengths in categories that we thought were a little bit oversaturated. Coca-Cola is still able to stand in today's rapidly changing economy, one, as a business model for stability, right? Because they have been not only shelf stable, but they have been a stable business for decades. That's the reason why they've been able to raise that dividend, right? So let's start with why they're so profitable, starting with their stability, right? Coca-Cola has survived world wars. They've survived recessions. They've survived inflation spikes, right? Supply chain disruptions, everything, you name it. In 2026, its business remains incredibly resilient because it sells something people buy, whether it's in good times or bad times, struggling times, down times, people will still flood the stores and buy their products. But from Coke to Sprite to Powerade to Minute Maid, the company owns over 200 different brands across nearly every beverage category. Okay, this brand diversification, what it does is it allows for them to give Coca-Cola a built-in safety net. Even when soda sales fluctuate throughout the years, they change, right? Other divisions pick up the slack. Other divisions try to make space for their companies and their brands. For investors, that means that these is somewhat predictable earnings, okay? It's lower volatility and it gives you and them long-term confidence. Not to mention that this company, Coca-Cola, is also a dividend king. I mentioned it before just a couple seconds ago. They have over 60 years of growth. That's 60 years of raising its dividend. In order for a company to be able to do that, they have to be growing, you all. They have to be bringing in that sweet revenue. And one of the biggest draws for Coca-Cola and its investors is that dividend. Its dividend remains one of the most reliable in the S&P 500. If you're looking for passive income, Coca-Cola is practically the gold standard. Okay, it's one of the greatest stocks to ever hit the stock market. Okay, historically speaking, the company uses a simple but effective strategy. What is their strategy? Steady revenue, not too much on the margins, efficient cost controls, strong global appeal and global distribution, and a commitment to returning cash to their shareholders through those dividends. Not only through those dividends, but the steady price appreciation of the stock. This makes Coca-Cola especially attractive for retirement portfolios, people that want to hold this thing long term, people that don't plan on selling, people that want to pass this stock on to their children or their grandchildren, and anyone, chasing consistent cash flow. Their global reach also keeps their competitors at bay, right? Because they are diversified. They're well diversified. Coca-Cola's blueprint or their global footprint is world renowned. Okay, this is a company that operates in over 200 countries, over 200 countries as a company that started as a soda company, right? To put that into perspective, there are only 195 countries recognized globally, which means Coke is literally everywhere, right? So this global presence gives Coca-Cola revenue streams that, no single economic downturn can destroy. It would have to be a global economic downturn for them, right? So if sales decline in North America, they may grow in Asia, Africa, or Latin America, right? And it's those other places that helps balance things out. And what they've been able to do in 2025 and 2026 early on is they're still developing their markets. They're still having markets expand in different areas across the globe, which means they're still growing. The demand for ready-to-drink beverages is still growing, right? Despite what you've heard about the health conscious folks, right? But it means that Coca-Cola is perfectly positioned for that global momentum, right? They've also been able to adapt and be innovative in changing the market. Coca-Cola is not comfortable with just being stagnant. They've been able to grow their brand, literally grow their brand. They may be more than 130 years old or whatever that is, but they're not stuck in the past. They don't dwell there. The company has aggressively adapted new models, new brands, and they've adapted to what? The consumer, which is what you want. So, when you're talking about low sugar, zero sugar adaptations of their favorite beverages, right? Energy drinks. They own a massive stake in Monster in addition to their own brand. So they've been able to adapt in every market. Premium bottled water. Yep, they got that too. Ready to drink coffees and teas. Yep, they got that covered as well. So in 2026, Coca-Cola continues, right? They're just continuing their strong performance, their strong dominance, investing heavily in healthier alternatives for those that want to be health conscious and modern beverage categories, right? This strategy keeps the brand relevant. It keeps them relevant to younger generations, people that, again, are becoming more health conscious, and it broadens their overall product appeal, which means they're not locked down in one particular market, right? So we're talking about a cost-efficient brand, a franchise that has been recognized globally, that is constantly adapting their product to be able to meet the market demands. What more would you ask for in a blue chip company? So why consider investing in Coca-Cola in 2026? All of those reasons I just named, which are rock solid global stability across the country, across the map, right? Decades of dividend growth, 60 years, more than 60 years. Massive international presence, right? Constant innovation, keeping up with the market, and a highly efficient and scalable business model that they can change at the drop of a dime because they are tapped into what their consumer needs, right? So Coca-Cola might not be the flashiest stock on the market. It's not going to shoot up 1,000%, but few companies achieve this level of reliability, long-term strength, and stability across the market. I promise you, you're going to find few companies that are like Coca-Cola, which is why long-term investors absolutely love Coca-Cola. I do as well. I have it in my portfolio. I'll probably continue to invest in Coca-Cola unless something drastically changes, which I don't think it will, because Coca-Cola has proven we're here to stay. We're able to adjust. We're not going anywhere, right? So the last thing I want to do is touch on a few key points from this article. Key points: a beverage giant approved its 64th consecutive annual dividend increase in February. The company generated $11.4 billion in adjusted free cash flow in 2025 and expects that to grow, giving the dividend strong financial backing. That's important. You want to have what strong financial backing means is basically, is this company able to sustain the dividends that they're paying out every single year? And Coca-Cola is proving that not only are we able to sustain it, but we're able to increase it as time goes on, right? So let me drop down, and right here on February 19th, Coca-Cola's KO board of directors approved a roughly 4% increase in the quarterly dividend, raising it from 51 cents to 53 cents per common share. That equals an annualized payout of $2.12 per share, yielding 2.63%, you all. That kind of consistency is rare. Coca-Cola is considered a dividend king, as we already addressed earlier. A title reserved for companies that have raised their payout to shareholders for at least 50 consecutive years. What more would you ask for in a company like Coca-Cola? I'm asking y'all. I'm asking y'all. What is it that will keep you from investing in Coca-Cola right now? Even with its stock price being nearly $100, right? Or nearly $90. I believe it's under 90 still. But even with at that price point, I'm comfortable with investing in Coca-Cola because, again, we're talking about long-term strategy here. And for the long term, I don't really see too many companies being able to stand the test of time. Before we go, let me go over to stock analysis. The last thing I want to do to show this stock's performance. Boom, Coca-Cola. So let's just do the last 6 months. Last 6 months, they're up 16.5%, more than 16.5%. The last year, they're up 12.5%. The last 5 years, they are up 60%. So again, you can see the charts here, and even with the ebbs and flows, you can easily tell that they are on an uptrend. Again, this is one of the most stable companies in the world, you all, and one of the best companies that you can buy in the stock market, in my opinion. So do your due diligence, do your researches, come back, do your Googles, and make sure you make the right decision that's best for your portfolio. Remember to invest diligently, but more importantly, remember to invest responsibly. And I'll check y'all out in the next one. Later, y'all. Thank y'all for watching. Appreciate y'all.